It's time for the Margin Matters Minute with Money Man Jason Brown.
All right, Jason Brown here. Welcome back to another edition of the Margin Matters Minute. Thanks for joining me today. I have a very special guest joining us talking about the topic of hidden costs of homeownership. And today we have Mr. Jim Martell, who is an expert realtor. He's been a realtor in the Atlanta market for nearly 20 years. That's 2 decades. And Mr. Martell is first of all, he's a military veteran who served in a U.S. Marine Corps. So thank you so much for your service, Jim. We really appreciate that. And Jim is also a managing partner and vested interest partners with Keller Williams Realty First Atlanta. So Jim, thank you so much for joining us and sharing some knowledge with us today.
My pleasure, Jason. Thanks for having me.
Awesome, and I know that people are really this is a hot button topic. I think with home ownership is that the big issue that I see in the personal finance world is everyone that's buying homes, they really just look at the mortgage rate, right, or the mortgage price. Oh, well, hey, I can afford $1,500 a month. And they do the mortgage calculator and they look at their budget or how much they're making. Oh yeah, we can do this, $1,500 a mortgage. Yeah, we can do that. But they forget about all the other costs. And some of them are hidden, some of them might not be hidden. But
Right.
I wanted to ask you, Jim, let's just go through each one, kind of like a line item, and share with us what should people be actually budgeting for when they purchase a house.
Sure. Well, those are all great questions. And one of the things that we do when we're buying a house is we have it inspected. And when you have the home inspection, you get a built-in list of upcoming costs. Now, it may not specify, the inspection report may not specify what things cost, although often you can get that also.
Mm-hmm.
But what I mean is you have a list of things that maybe if you want to really research it, if that's the kind of person that you are, um, go to Home Depot, Lowe's, your favorite home improvement store, and look at what products cost and
Mm-hmm.
figure in some dollar amount also for the labor if you're not going to do it yourself, in terms of what it would cost to replace something and in terms of how long those things last. And so for me, I kind of get this feeling that it's not really hidden costs of home ownership as much as there are hidden costs of renting a home.
Okay.
And we can kind of chat about that if you want to, but I don't want to steal your thunder here.
Well, would they be similar costs in
In my
renting
opinion,
versus?
yes, because
Okay.
particularly today, and here's why.
Yeah.
When you rent a home, you're looking at a rent payment. You might have a deposit that you have to put down, like an extra deposit that maybe you never get back, like a pet deposit, for example.
Right.
My wife and I actually rented a home recently, and I can tell you more about that. Um, we have a dog, and we actually had to pay more in
Mm-hmm.
rent for the dog. Now we
Huh.
paid a pet deposit,
Right. Okay.
and we're paying more every month because we have a dog, and it's not like we got an extra dog house or something
Huh.
for our extra rent. So I'm still confused on that. But and we also have a smart device in our home that belongs to the landlord that tells the landlord if the temperature drops below a certain temperature, which is protective for their pipes, or to make sure the house doesn't get too humid. So it makes sense. There's also a detector on the water heater to make sure that it doesn't explode and leave water all over the place. And then there's something to do with the kitchen sink to make sure it's not flooding. And I think
Okay.
those things are things that this particular landlord built in. And of course, we have the pleasure of paying for it.
Oh.
So we have this rent cost
Okay.
plus the cost that I just told you about. And then, so we're thinking, okay, great, we get a house and we don't have to maintain it.
Right.
Okay. Theoretically speaking, right?
Right.
We can't be negligent with the landlord's property, but we don't have to put a new roof on it if it needs a new roof.
Right.
So Jason, when you look at what it costs to rent today versus what it costs to buy today, there's a pretty significant gap in terms of depending on where you are and what kind of housing product you live in. For example, a 1 bedroom, 1 bath apartment versus a 3 bedroom, 2 bath house.
Right.
And so to compare 3 bedroom, 2 bath houses rent versus buy, you're probably looking at somewhere in the $1,200 a month range to own it, and probably $2,000 a month to rent it.
Okay.
And that's a massive difference.
Right.
$800 a month, where's that money going? The renter thinks, well, it keeps me free, which is fine. It does that, but it's an extra $9,600 a year that they're paying for that freedom of being able to pick up and move at the end of a year. And who wants to pick up and move at the end of a year anyway, really?
Right. Right.
Um, Moving is a pain and it's
It is.
costly. And
Mhm.
if you do it yourself, cause yourself pain, and that's costly, right?
That's
As
right.
we get older, we feel the pain, not only in our body, but in our wallet as we're paying for medical bills for our indiscretions of youth, right?
That's right.
So, so anyway, the hidden costs are, I might think that I'm not paying for that roof when
Mhm.
I'm renting the house. I might think that I'm not paying for that dishwasher when I'm renting the house. The
Mhm.
reality is the landlord's not giving that stuff to me. He's not making a charitable donation of a roof to me. I'm paying for it. But
Right.
it's truly hidden because there's no line item for it. And
Right. That's
so when you
true.
buy a house, maybe you're only paying 1,200 a month. You probably ought to be looking at socking away some dollars. For example, your roof might cost $8,000 and it should last 20 years. So
Okay.
you can divide 8,000 by 20 and you can figure out that $400 a month, or excuse me, a year, is what you want to be socking away for a roof.
Okay.
Okay, now divide
That's
that
good.
by 12 and you're at about what, 33 or something like that, $35 a month.
Okay.
And so if you were kind of putting away a little fund of $35 a month uh, for the roof, now you're paying 1235 a month for your house.
Right. Okay.
And you can do that with virtually everything that wears out in your house.
Yeah, that's true. That's a good point.
Yep.
Because everything is made to be broken, right? Or everything is made to break. All your major
Well,
appliances, refrigerator, stuff like that,
yeah,
dishwasher, you're going to replace them, right? Every 10 to
you're going
15
to
years.
replace them. Yeah.
Yeah, you're going to
And
replace them.
yeah,
We just had to replace our AC unit. That cost 2,200. The exterior, $2,200, just the
right,
exterior. Now, if
right,
we had to replace the furnace, I want to say we replaced that once already, and it costs maybe 2,500, somewhere in that range.
right,
So yeah, all that stuff, it's expensive when you need it replaced. And
right.
the AC, as I always say, the AC doesn't break in January. It breaks in July and August.
That's right.
So when the AC breaks, it's not like, oh, we'll get it, we'll save up for a couple of months and get that fixed, replaced. Well, you're going to be sitting in a house where it's 85 degrees and dying of heat. So that's one of those things that you got to get it taken care of right away. And like you said, that's a really good way to budget for it, is to figure out the cost of all of these major expenses like the roof or AC unit or whatever, and then you can start a savings account or an emergency fund, whatever you want to call it, and you start putting away $50 a month, or it could be as little as 10 or $20 a month. And like, for example, we just bought that AC unit, so of course the first question I asked the AC repair guy is, how long is this going to last?
Right.
And I want to say he said it should last a good 15 years, right?
That's
And
what I typically budget for air conditioning
right.
components. Now it depends though, and I'm glad that you asked
Yeah.
because
Yeah.
I believe you live on the second floor. You live on the top floor of a
Uh,
condo
we're
building.
in a condo unit. We actually have a unit above and a unit below, so we're
Okay.
we're right in the middle, actually.
Okay. So your AC and heat are not going to wear out as fast as the 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 home above you.
Right,
Okay.
because
And that's
the hot
because it's not
air,
going to work as hard during the
right,
summer.
right, because the hot air rises, right? And we always hear that. So the top units are always going to be a lot hotter too, right?
Well, they're going to spend more on keeping their place cool, and accordingly, it's going to wear out their air conditioner faster.
That makes sense. Yeah.
A lot of folks have a two-story home, and
Mhm.
if it's been built within, I don't know, the last 20 years or so, whenever code got to where they had to have zoned air conditioning
Okay.
systems, your second floor will have a separate
Gotcha.
AC and furnace
That's
just for
right.
the second floor. And usually your furnace might never wear out for that
Mhm.
second floor, but
Okay.
the AC for the second floor will wear out sooner than the one for the first floor.
Right. That makes sense. And I will say we lucked out with the previous AC unit because we found out that thing lasted 21 years. So we
Sure.
felt very fortunate and blessed to have it for that long before it finally
Absolutely.
just went kaput. So that,
Absolutely.
yeah, that,
We had one last 18 years ourselves, and it was still going when we moved out last summer.
oh yeah, yeah. So you
Yeah.
never really know. Hot water heaters, another one, right? We haven't mentioned that yet. Hot water heaters. I mean, in this condominium complex I live in, it's about a 40-year-old complex, Jim. And I will tell you, there are a lot of homeowners that still have their original hot water heater,
Wow.
which shows you they don't make things like that anymore because now when
Right.
you buy a I think I've replaced mine twice already in 20 years. So
Really?
that they're lasting about 8 to 10 years.
Wow.
Yeah. So and they're not cheap. We got a 40-gallon hot water heater, and if you hire a professional plumber to do it, it's going to cost you around $1,000 to $1,200, like with labor and everything. So for
Right.
installation, uh, so there's that's a pretty big cost too. So that's another one you have to account for, right?
Sure, sure. So, $1,000 for over 10 years is $100 a year. So about
Yeah.
833 a month or something like
Yeah.
that.
So if you plan ahead for it, you're not going to be blindsided by, oh, I had no idea the hot water was going to go out. Well, you should have, because you know that. Well, unless you're like some of my neighbors who theirs have lasted forever, but
Sure,
that's usually not the case because they don't make them like that anymore. It's a completely different setup, the way that those were installed and I guess manufactured and put together. So they
sure.
they they literally don't make them like that anymore. So,
Right.
well, Jim, what are some other costs, or I had a whole list of them, but I didn't want to steal your thunder. Like
Yeah.
we talk about property taxes, or what's PMI? You want to talk a little about PMI?
PMI is private mortgage insurance, but before we jump off on that, I
Yeah,
want to tackle something before I forget, and it's
yeah,
an aside for sure.
sure.
It made me think, if you can't save for whatever reason, if you can't figure out what your costs are going to be over the long term, and then save according to that, you might want to have a home warranty in place. Now,
Okay,
those cost anywhere depending on the coverage and the provider. It could be as little as $300. It could be more than $600.
okay,
Depends on the property as well and where you are and everything else. But so maybe $300 to $600 a year in home warranty may be that insurance policy, if you will, against a devastating $10,000 or $5,000 HVAC replacement bill that might
mhm,
come out of nowhere one summer, and you need to get it, handled, because a
right,
house at 90 degrees is not livable, in my
right,
opinion.
right.
Not for long. You're not going to sleep
No,
well.
no, I think we lasted 2 days and we were like ready to move out. So
Yeah, absolutely. You
we,
want
we,
to
we
start doing a couch tour with
yeah,
friends at that point.
exactly. And also the humidity is also what
Yeah,
kills you, is the
yeah,
humidity inside the house. It just gets so humid.
absolutely.
But that's a good thing to consider, is the home warranty, potential option of the home warranty.
Yeah.
So that's actually a really good note, Jim. I appreciate you sharing that.
Yeah, I mean, you're either going to self-insure basically by putting that money away every month and having some kind of rainy day fund to take care of some things
Hmm.
as they come up, or you're going to pay another, you're going to pay somebody else to insure you, if you will,
Right.
the home warranty. And if you do neither, then you're going to suffer.
Yeah,
At some point, it's going to
you'll
hurt.
have to swipe the credit card and then pay 15 to 20% interest rates on those credit cards, which you
Yeah,
don't really want to do.
no,
Try to avoid that.
no. So, and so you had asked me a question about
Well,
PMI,
we were just talking about like what are some of the other expenses, the
right?
homeowner's expenses, and a lot of people don't really understand what PMI is. So I figured you, as the expert, would maybe explain a little bit of that extra fee, the PMI fee on a lot of people's mortgages.
Sure. So the first thing I would say is that I'm the real estate brokerage guy, not necessarily the mortgage loan guy. I
Okay.
know enough about mortgage loans to tell you what PMI is generally, but I would always, advise that you speak with your mortgage lender and they can definitely give you the straight skinny on your PMI if you have it. PMI stands for private mortgage insurance, and it's for conventional loans with less than 20% down.
Okay.
And not all of those even, some loans that are less than 20% down, um, that are conventional loans, they may not have PMI. It just depends on the investors at the other end of the transaction that are buying your mortgage. And it's a convoluted process that,
Right.
we don't want to talk about here today necessarily, but that's basically what PMI is.
Okay.
It's
So
it's
one,
private mortgage insurance covers the lender if you lose your job and you're unable to pay your mortgage.
I see.
And
The way I understand it is once you reach a certain threshold, the PMI gets dropped off the mortgage. If you,
it it should. Sometimes that happens automatically. Sometimes you may have to refinance it, or you may have to bow up and say, hey, it's time for you to drop the PMI. And
right.
that would typically be once you've reached that 80% threshold. But again, that's a specific thing. It's all terminology in a legal contract. So it would be a case by case basis as to when and how to get that dropped.
Okay. Okay. That's good. That's a good explanation of that. Because I know a lot of people don't really fully understand. Well, what's this? It just looks like a junk fee, right? And they
Right.
don't really understand what it is and how to get rid of it, or why some people have it and some people don't, and
Right.
all that. So,
Right. And of
um,
course, the lender insists on the PMI. It's part of the package. It's
right.
not an option. Like you may be able to buy mortgage insurance as an option. I'm not saying that that doesn't exist. I'm saying that when you have PMI on a conventional mortgage that's less than 20% down, typically it's not going to be an optional thing. It's part
Okay.
of the contract of the loan. They
Right.
won't give you the loan if you don't provide that PMI, and that's so that they won't lose money if the worst happens. That's what insurance is for, right? So
Right.
that's basically how it works.
Gotcha. Okay.
There's
Well,
also, I'm sorry, there's also
go ahead.
MIP, which is mortgage
Okay.
insurance premium,
Oh,
which
okay.
is the FHA version
Okay.
of the PMI,
I
and
see.
that's a fee you pay up front, which is a mortgage insurance premium uh,
Okay.
to the FHA, so that they can provide a guarantee of a certain percentage of your loan.
Okay. Yeah, I wasn't familiar with that one. That's good to know as well.
Yep.
Now, I guess what one last one I'll bring up, and you can share some knowledge, is the property taxes, right? So, what I've been seeing is a lot of, I guess, family and friends that I've known over the last couple of years have upgraded their homes, right? They've gone from smaller homes to bigger homes. So, and I'm not really sure if people realize that some of these uh, upgrades in home sizes come with a huge jump in property tax, right? So some of these smaller single family homes, you're only paying maybe a couple $1,000s a year in property taxes. And then you get into a bigger home and then you're looking at $7,500 a year. I mean, 2 or 3 times as much. So what are some of your thoughts on the property taxes? How can people, I guess, prepare or research or find out how much property taxes might be? And I know that's a big it's a hot button issue every year. Everybody seems to always want to fight their property taxes because they go up every year. And you always hear people on social media, oh, I'm going to fight this in court, or I'm going to appeal this. So that's a big thing, is that I'm appealing this. It went up 50% or whatever it is. So what are some of your thoughts on the whole property tax situation?
Sure. Well, that it's a great topic for sure, and we should even talk in depth about it, and maybe talk about some case, a case by case basis scenario of
Okay.
a property tax appeal and how that all works. Um, what I will tell you is lenders typically estimate your property taxes as being between 1% or 1.1%, maybe 1.05% of the property value per month.
Okay.
And so that's how they kind of come up with an estimate on how much you're going to have to escrow per month for your property taxes. Now, it varies, of course, by municipality and by state, and
Hmm.
the processes and procedures vary as well. In Georgia, I can tell you, and in certain counties in Georgia, there's a freeze effect that happens when you put in an appeal. And so you might freeze your property taxes wherever they are for a 3-year period simply by filing an appeal.
Okay.
And that may not be correct either as of the time that you're watching this. And so I would say consult with a professional like myself so that we can guide you through the process, and or put you in touch with certain other people that might help
Right.
guide with the process. But certainly we'd love to help you get the most out of the tax dollars that you're paying, and for your property taxes. And whatever you do, when you buy real estate, make sure that you apply for a homestead exemption if it's your primary residence, the as soon as possible.
Okay. Why don't you share a little bit? What is a homestead exemption, Jim?
Homestead exemption on your taxes, it basically lowers, it's kind of like a standard deduction
Okay.
on your income tax return,
I see.
or an itemized deduction. It's something that it reduces your tax bill.
I
And
see.
so, and
Okay.
it's significant,
Okay.
because when you are a homeowner, the county and or the municipality, the state, they are interested in that, they realize the value in having owner occupied properties. And so they
Mhm.
reward you, if you will, for having a homestead in that county or in that state, by reducing your taxes if it's your primary residence.
I see. Okay. Yeah. I've seen a lot of people again on social media saying, hey, make sure you apply for this homestead. And I didn't really know what I'm almost certain I've done it in the past.
You
Um,
have, and,
yeah,
and and
I've
the
done it.
reason I know that is because you and I know each other, and I've looked at your stuff even without you knowing it. I can look at your tax bill,
Right.
and I
Okay.
can see that you're not paying the exorbitant amount of tax
Oh,
that you would be if you
okay.
had failed to claim that.
Okay. Well, that's good to know. Sometimes you
Yeah,
do stuff and you forget you've done it, and then everyone's like, "Oh, you need to do this." I'm like, "Wait, but is this something new? I don't know."
it's
But
the
yeah, that's good. That's a really good tip. So someone who hasn't done that should definitely research the opportunity to apply for that exemption and save a lot of money in their tax bill for sure. Um,
absolutely.
as we wrap up with Jim Martell, expert realtor here in the Atlanta market, do you have any final thoughts on any other hidden costs of home ownership or rental tenantship as we wrap up, Jim?
Yeah, sure. I would just throw out there that if you have any questions, comments, concerns about your specific situation, because it is a case by case thing, by all means, please reach out. I have a tagline that says, it starts with a conversation. And so just hit me up by email, by telephone, by text message, and let's start the conversation. And if you have questions and concerns, I can address those as they come.
Also, well, that's a perfect transition because I was going to ask you, how can people connect with you? I know you serve the Atlanta, Georgia market, but I know you're trying to expand to more areas in the Southeast. So share with us a little bit about that, and then let us know all your contact information if anyone wants to reach out to you for your services.
Sure, absolutely. So we'll put that on the screen. And of
Right.
course, you got my email is jim@listwiththevest. That's thevest.com. And my phone number is 678-757-4550, which is good for text or call. Um, I would say, I would just add that a number of agents, as managing partner of Vested Interest Partners Group at Keller Williams First Atlanta, I handle a number of agents who cover all of Metro Atlanta, as well as all of North Georgia. And we are expanding into the upstate of South Carolina as of, at some point in the next 12 to 18 months, we will claim the upstate of South Carolina as part of our territory as well, and we'll just see where God takes us from there.
That's great, man. It sounds like you're really growing your business, and I know it's been quite a crazy market in the real estate market across the entire country with the record low interest rates that people are really wanting to buy houses and take advantage of that as
Great
well.
opportunities to build wealth.
Awesome. Yeah, absolutely. So, and I'm sure we'll do some more videos talking about the market as well. So thank you so much, Mr. Jim Martell,
Thank
expert
you.
realtor, and check him out. We'll put all his links and contact info in the description below as well. So if you want to connect with him, please do. I'm sure I'll be happy to hear from you.
Thanks
Until
much.
then, I'm sorry, go ahead, Jim.
I was just saying, thanks a bunch, Jason.
Absolutely. Absolutely. Thank you so much for your time and sharing your knowledge today. And until next time, this is Jason Brown saying to remember, it's not the amount of money you make, but the margin that matters the most. And we'll see you next time.
Take care.